So pretty interesting today. Based off of a lot of news that we got, there is a proposed tax bill that wants to tax unrealized gains and also long-term capital gains over 45%. We're going to break this down in this video. I don't normally make videos like this, but if you'd like to see more videos and you like the way that I break things down, then all I literally ask you to do is drop a thumbs up, subscribe to the channel, and if you ever have any suggestions for future videos, feel free to comment down below. With that being said, very quickly, I do want to talk about the overall NASDAQ market. We did end in the green, but market was pretty much sideways for the entire day. From where we opened at to kind of where we really progressed, there was really not much progress, really just trading sideways. And on the 4-hour time frame, we're still on the overbought side, but we're still above the moving average and the EMA. Market sentiment is still bullish. Technically, we're not necessarily selling off. We're just very overbought based off of the RSI indicator, which again, we can't be surprised if we do begin to pull on back. So all I'm looking for tomorrow during our live trading session is progress. Are we making progress on the upside? Or are we finally going to make progress on the downside and begin to correct ourselves? So if you want to tune on into tomorrow's live trading session, that's going to be that second link in the description down below to tune on in. Thing that I want to talk about very quickly that I got asked a lot about today is this: Kamala Harris backs Joe Biden's proposal for 45% capital gains. So this would be a proposed tax bill of 45% on capital gains, and it's for individuals that are making over $1 million a year. That's the thing that I want to make sure that you are aware of. And please make sure you do your own due diligence. With that being said, they also want to tax unrealized capital gains. That is something that I've never even heard of before. I just have so many questions, and we'll talk about it in some detail right now. So these are the three things that I think you should begin to ask yourself. Well, who gets affected by this 45% capital gains tax? It's only individuals that are making over $1 million a year. The thing that just doesn't make sense to me is that 45% capital gains tax that is being proposed, supposedly, it's not even just for individuals that are day trading and or trading multiple times throughout the year. It's a proposed tax on long-term trades as well, meaning that as of right now, if you have an investment that you hold for more than 365 days, it doesn't fall under the short-term capital gains tax, which is like 35 or 37%. This would fall under a long-term investment tax if you end up selling after 365 days. And I think depending on your tax bracket, it could be anywhere from 0 to 15%. So very minute in comparison to right now of 35%. That's one of the main benefits of investing into the market. So you don't realize and have to pay an additional 20 to 35%. Now they are trying to say that no. It's not just going to be short-term capital gains. Now it's also long-term capital gains that will have to pay 45%. That just doesn't make sense to me. I think that's just going to encourage big players to not even hold positions at overbought levels anymore, and it's just going to create more market volatility. But again, I guess we'll learn more as they begin to disclose more about that tax proposal. The thing that just does not make sense to me, and this is the second thing that I want to talk about, is this 25% tax on unrealized gains. This is really just for individuals that are worth over $100 million. Now you might be like, well, okay, I don't really care about that. I don't think you understand how mind-boggling this is. That might not affect you. It might not affect me just yet, right? Obviously, we're working towards that 100 million net worth. Nonetheless, it literally just doesn't make sense. I do not understand how you're going to tax someone 25%, which is a pretty sustainable tax for a net worth of over $100 million on money that they don't actually have. A lot of people's net worth is based off of, maybe their overall, what is it called? Just investments. It could be their assets. It could be the valuation that they own of a specific company that's publicly traded. It's not actually money that they have liquid. So like Jeff Bezos, when they say that he's worth $200 billion, that dude does not have $200 billion in his bank account. Like, he would have to sell all of Amazon, all of his shares of Amazon, to therefore then have that money. And by the time he starts selling all those shares, then obviously he's going to create some selling pressure on that stock itself going against him. With that being said, if we begin to tax these individuals based off of their net worth, well, what happens during downturns? If we're going to tax them 25% on money that they supposedly make based off of their net worth, they're going to have to sell those stocks to therefore, or those assets, if that's a stock or if that's based off of personal assets, real estate, whatever the case might be, to then therefore cover the tax bill. That just makes absolutely no sense. And what happens if during a downturn, they lose 50, $100 billion in net worth valuation. Do they therefore then get a refund? It doesn't make sense. When it comes down to valuation, it makes sense to tax someone on money that they actually have and collect. It makes absolutely zero sense. I don't care if you're worth $1 million, $1,000, or $100 billion. At the end of the day, for you to be taxed on money you don't actually have, like literally this is not a loophole. It's like you don't actually have the money. So therefore, if you therefore get a tax based off of you being worth $100 billion, and that's how much it increases that year, and you get a tax bill of $25 billion, you're going to have to liquidate some of your assets and therefore create more selling pressure and move these entire markets to just cover that tax bill. And if then the next year the market ends up going down, then again, are you going to get a refund? Or that's not fair, or even worse, the government's just going to be like, well, no, then you just don't have to pay anything. But what about, all the money that you paid last year? Now you don't have any of that money, yet now you don't even get a refund. It just really doesn't make sense to tax someone on money that they don't actually have. So that unrealized tax is just, again, I'm really trying to, like, if you think it makes sense to you and you want to share why you think it makes sense. I know a lot of people are all about, oh, I want to tax the rich, all that stuff. That literally makes no sense. It's like money that isn't even realized yet, and that's why it's called unrealized capital gains, and they want to tax it 25%. So I think it's one of the wildest things that I've ever heard, and I just find it very interesting on how it's going to play out, where we have a bunch of people in Congress that are actively trading and that have active net worths of over $100 million. So how is Nancy Pelosi and her husband going to feel when they have to pay not only 45% tax on their series of trades, long-term and short-term, but on top of that, now being taxed 25% on unrealized gains? I think it's going to be very interesting to see if this does pass, how those high net individuals and or high net worth individuals end up doing their part to avoid that tax bill, because we know most likely they're going to try to create loopholes so they can avoid it. But it's people like you and I that will always end up having to cover the mistakes that our government continues to make. And I think that's the part that baffles me about all of this. Why do we continue to pay more in taxes for mistakes that these individuals in power continue to make? That just has never made sense to me. It's like they make the mistakes, then therefore they just increase our taxes, so we cover the mistakes that they made, and for them to try to catch up, it's so backwards to me. It's like, let's make sure the people in power are actually doing their job correctly and not just having us to subsidize their mistakes over and over again. But again, I guess that's a deeper conversation. With that being said, it's going to be very interesting to see how these high net worth individuals end up moving their assets around, especially where a lot of their net worths are made up based off of their companies that are publicly traded. And if we end up seeing a lot of selling pressure, then I think that there's only one finger that we can, one direction that we can point the finger, and that's going to be thanks to this proposed tax bill. So excited to follow up, excited to see how the market trades tomorrow. And again, if you ever want to tune on in, that's that second link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.